2024 was full of surprises for Sofi stock investors, with a roller coaster ride that turned a sharp decline into a remarkable recovery. As the year ends, the big question looms. Should you buy Sofi stock now or wait for 2025? In this video, we'll break down key financial metrics, growth drivers, and expert valuations to uncover if Sofi is the smart investment for your portfolio heading into the new year. Like, subscribe, and let's talk Sofi. 2024 turned out to be a much better year for Sofi stock investors than expected. While the stock price is still down 1.5% year to date, that's a recovery from being down over 30% midway through the year. The second half of 2024 brought strong momentum, pushing the stock higher. But now, with 2024 almost behind us, the big question is, should investors consider buying Sofi stock for 2025 or even before the year begins? In this video, I'll analyze key financial metrics and valuation estimates to help answer that question. Sofi's price movement this year has been a roller coaster, starting with a steep decline and then a strong recovery. You might be wondering, what drove this dramatic shift? The primary factor was Sofi's lending business. At the end of 2023, Sofi's management announced they would scale back lending due to concerns about rising inflation and slowing job growth, which could pressure U.S. consumers and potentially lead to a recession. For more educational information, please check the link in the description below. During the first half of 2024, Sofi maintained a cautious stance, echoing similar concerns. However, mid-year brought a shift in perspective. Management observed that U.S. consumers were more resilient than anticipated. Job gains persisted, layoffs were minimal, and the overall economic environment improved. With these encouraging signs, Sofi increased lending activity and now expects to see growth in its lending business for 2024. Initially, they forecasted a 5-8% decline in this segment, making this turnaround significant. Although Sofi aims to shift toward becoming a more service-oriented company, lending remains a major revenue driver. This transition contributed to the company's impressive rebound. Looking at its longer-term performance, Sofi's revenue has quadrupled from $600 million in 2021 to $2.5 billion over the past 12 months. This growth is fueled by its attractive value proposition as an online-only bank, which allows Sofi to save on the costs associated with maintaining physical branches. One of Sofi's key strategies has been offering competitive yields on savings accounts. For customers using direct deposit, Sofi provides industry-leading returns, drawing users away from traditional brick-and-mortar banks that often offer near-zero yields and charge monthly fees. This approach has been highly effective in attracting new customers, especially those dissatisfied with traditional banking. For more educational information, please check the link in the description below. Sofi's business model appears increasingly lucrative. Its profitability has improved significantly, with positive earnings per share, EPS, reported recently. Management is optimistic that EPS will continue to grow. Return on equity, ROE, a key metric for evaluating banks, has also improved, climbing from 12% in 2022 to 3.68% in 2024. While this figure isn't yet impressive, the consistent upward trend signals strong potential, especially as Sofi transitions to more service-based revenue streams, which require less capital and offer higher profitability. Now, let's examine some valuation metrics. First, Sofi's forward price-to-earnings, PE ratio, stands at 67, which might seem high after the stock's significant run-up in mid-2024. This metric alone suggests the stock is richly valued. Another method of valuation, discounted cash flow, DCF analysis, provides a more optimistic outlook. Based on an October analysis, Sofi's intrinsic value is estimated at $21.38 per share compared to its current price of $16.13, indicating a 33% upside. Finally, I projected Sofi's stock price for the end of 2025 using EPS estimates for 2026 and various forward PE scenarios. The midpoint of this analysis places Sofi's price target at $21.50 by the end of 2025. Evaluating Sofi across these three metrics, forward PE, DCF analysis, and price projections, I conclude that the stock is undervalued. So to answer the question, is Sofi stock a buy for 2025 or before? My answer is yes. That's a watching. Hit the like and subscribe. Until the next video, stay safe.